All right, let's get this session started. Welcome to the London class. Let's see what's going on in the markets today. If you're new here, hello, my name is Deeyana Angelo, aka Dee, a Series 3 registered, qualified, however you want to say, futures trader specializing in some of the more alternative products. If you were watching me last night during the main broadcast, myself, Tim, and JD had a little bit of a fun time saying things like "par," par, and I think Dolby might have gotten a little bit annoyed with us towards the end. But yeah, that was a very fun session. All right, let's see if anything's moving. I mean, some things are moving. I'm just a little bit skeptical that we're going to get another big movement for the London session again, because probabilistically that tends to be not that great. All right, I've got the full screen there. But yeah, let's just scan through some of the various markets that we've got. Let's have a look at gold. Gold screamed upside towards the later part of the day yesterday. And it seems to be continuing the scream, at least in the Asian session. We are reaching that area of overhead supply, so right now, I just want to wait and see what they do here, because if there's no reaction to the downside, there could be some more longs, and we could be in for the all-time highs yet again this week. That would be fun, wouldn't it? Now, whether that happens during London, probably not, because we do have the COMEX session that is much bigger still. So my guess is that we're going to be a little bit quiet here for a while. So yeah, I'm gonna wait and see what they want to do. We did go above the initial balance by quite a bit, and whenever a very big move happens comparatively outside of the initial balance, it doesn't always mean oh yeah, great trending day, let's go. It might be good for some scalps, but as you know, I'm not a scalper, so we look for bigger opportunities rather than a few takes here and there. So yeah, gold, certainly interesting spot, but we're going to wait and see what they want to do with it. Let's have a look at crude oil. Now, I don't really like trading crude oil outright, purely because it's a bit quiet these days. So if you look at the NYMEX session, even yesterday, it was like 127 ticks, 127 ticks for the entire NYMEX session, and it should be the main session. We used to have 300 to 400 ticks, and that means that I'm just using it as confluence for gasoline futures that carry the symbol RB, which is basically RBOB gasoline, and that stands for a very catchy name, reformulated blend stock for oxygenate blending. So there you go. But we call it RBOB, right? Let's do a little roll call. Let's see who is in. Trader Dan says, get your roofers a nice bacon sandwich. You will get a better job done. Well, for now, they just want donuts. So, you know, whatever they want, they can have, obviously. We actually know these guys. They did our roof like 15 years ago. And yeah, so for now, they just want donuts. They are still here. They will be here probably the whole week. But yeah, they're getting on with things. In case you're wondering what happened, we had a storm and somehow the chimney got broken or something. I don't know. It's an old house. It's been here since 1853. So naturally, some things are going to malfunction every so often. We've got Trader Slava, long M and Q3. Okay, so let's have a look at NQ for a bit, just from bird's eye view. Okay, yeah, I will be probably more in favor of longs from this larger time frame, purely because the previous week's candle is pretty bullish, right? It was pretty bullish, and we're just going through these speed bumps without much in the way. But obviously we're day traders, so we want to have a look at day trade conditions. Daily chart to me also looks bullish. Yes, we have a couple of overhead supplies, but this is all-time highs, guys. I mean, not really in favor of shorting. I would probably either wait until the daily chart shows some sort of a reversal before considering shorts, or maybe if we run into some options levels intraday. But yeah, for now, it just seems like they are trying to push it higher. We've moved away from VWAP as well, and we actually haven't hit VWAP since about 1 a.m. my time. That's like an hour after Tokyo Open. That's all bullish. I mean, maybe if you're looking for a little mean reversion somewhere, but just be careful shorting equities, because in light of no news it's good, right? So they're just gonna keep going higher. So careful. I suppose we can have a look at some options levels too. So let me grab those for a second, because I haven't done that yet for NQ. Okay. Okay, let's see. I don't really have that much around here. There is like X1 around 21,900. But I do have some more space until we hit the projected ranges upside, closer to that 950 area. That's maybe where I would consider some intraday shorts, but even so, I would not keep intraday shorts for very long. It would be, more of a scalp down to like any nearby level. And if that is not the case and we kind of miss the move down, then you can maybe look at the overnight VWAP as the next point of interest. And when it comes to the value areas, I mean, those are very far away, so that's not going to be that relevant. The only other thing that we have to look out for is the initial balance high and low. Compared to the overall range, this is still very, very quiet. So right now we're sitting at about 228 ticks for the entire London session. And considering that NASDAQ moves like over 1,000 ticks per day, that's like the tiny, minute number. So yeah, maybe some pullbacks and then maybe some longs. I don't really trade NASDAQ all that much, and I usually trade it for power hour, for the last hour of the day. So I don't really pay too much attention to it, but it's always an interesting product because it moves so much, and many people are obviously very keen, so much so that some people are total NASDAQ addicts. Testanix is here saying, I'm trying to day trade, specializing myself only in MGC and MCL markets. Sometimes I see no opportunity in a day according to my strategy. Is that bad? Can I be funded like that? That doesn't have to be a bad thing. I think the worst thing is if you cannot tell that there is no opportunity, right? So if you are somebody who's always expecting trades and just clicks buttons, that's, that's generally a more difficult thing to sort out. But if you are, you can't go to the extremes of both sides. So you can, not have a setup for 2 weeks. Now that would be bad, because that means that you're just looking for swing opportunities. You're not really looking for intraday. However, if you're just skipping an odd day here and there, and then maybe trading 3, 4, 5 times a week, that's actually absolutely fine. I would argue that you would have better results and more smooth results than somebody who's doing like 40, 50, 100 trades per day and relying on super high accuracy over a higher risk reward. I'm always more in favor of the higher risk rewards than people who are just doing like, trades like for a few ticks here and there, because that tends to mean you need to maintain a higher accuracy. Now, if you take many years of trading into consideration as a sample size, that becomes extremely difficult to maintain. High accuracy, everyone's going to have times when their accuracy slips. And if you are looking at scalpy type trades and negative risk rewards, which is usually the case, that tends to mean that if you go down in accuracy below 56%, you will stop bleeding money. And look, 56% accuracy is not bad. That's actually really good. Some of the best traders in the world that, built empires, like Paul Tudor Jones and stuff, he only maintained between 47 and 50% accuracy. And he was more on the day trading side as well. However, if you're only trading, let's say, 3 times a week, but you maintain an accuracy, a risk reward of over 2R, and accuracy of about 43, even 30%, 35%, you will be extremely profitable, and you'll probably live a very stress-free life, because to me, scalping is a lot more stressful. It binds you to the screen all the time. You have to sit there and watch it. I have times of day when I look for my setups, so I do trade nearly every day. So I will probably be trading, between 2 and 5 trades every single day, but I trade multiple products. However, if you're only, looking at 2 products and you just don't see anything, that's actually a really good thing. So you can be funded as long as you're not at the extreme where you don't trade for 2 weeks, because that's going to take forever, right? In order to get funded and reach the target, if you only trade a couple of weeks at a time, like one trade, then nothing for 2 weeks. That's more swing trading. That's not really intraday. And yes, you will get funded, but it's going to take you 3 months to even get to the funded stage. Now, again, that doesn't have to be a bad thing, because back in the day, we used to have 2 phases on Topstep. So the first phase would last you at least 10 days, maybe a month, and then after that, it would be after that it would be sorry, I'm just listening to what my husband is talking about. So you would have one phase, maybe 10 days for me, and then you would have to trade for as long as it takes you to get to the actual funded account, but you had to keep your weekly loss limit to the same daily loss limit, which was 3,000 back in those days. So basically, in phase 1, you would prove that you can reach a target, but in phase 2, you would prove that you can reach, that you can stay within the downside parameters that they've given you, pretty tight downside parameters. And in a way, that was better, better for trader development. And obviously over time, the industry has developed. We had a whole bunch of competition, and, they came up with shiny new things. No daily loss limit, get funded in 1 day, get funded immediately. So, it just kind of plays into the lack of delayed gratification that you should have as a skill as a trader. But, it doesn't necessarily have to be that it's a bad thing. It's nice to be able to get a new funded account in a day or 2. Is it the best for new traders? Probably not. So I would say test and X, just keep doing what you're doing as long as you're not at the extreme of that swing trading and not actually trading for weeks at a time. That will be bad. But if it's just only a couple of days and you can't really see anything, that's fine. So keep going. That's excellent. I see Ajaz is in here. Hello. Thomas Swinton. Good morning. Short 10 micros. Okay. I mean, yeah, as a scalp, that would be pretty good. Where's your target on that, Thomas? Are you still in that? The machine, it says, what's going on in here? Well, for now, we're just scanning, deciding, just taking it slow. Breathing, waking up, having coffee, and trying to get an understanding of what is going on in the markets rather than just clickety-click, right? What about the DAX fade? Maybe targeting today's single prints. Okay, so whenever we have a big move, let's have a look at DAX. And just for reference, this is the trade that I was in yesterday. Took it off at 2R, so I had a set double target. And that was it. I don't know whether it's going to fade it. Right now, we haven't even exited outside of the initial balance range. That doesn't balance range. IB range. That's a new new thing. So yeah, raging to the upside, but then nothing, and not even getting outside of the initial balance. Usually after big days, we tend to have a bit of a hangover day when nothing really happens, maybe an isolated move in like 30 minutes and then nothing. So just be a bit careful. I wouldn't be looking for yet another big day today. And if I find any sort of a move, it's going to be later in the London session, just to give it time to develop. Sometimes I even trade during the New York session on DAX, right? I wouldn't be necessarily looking for, London trades post big days. And, yesterday I had one big trade in RBOB, one big trade in DAX. How likely is it we're going to have another big trade today? It's not, right? It's a little bit improbable. So yes, there could be a fade, but just be careful, right? I would be looking at a bounce from maybe VWAP and then a little scalp back up. Everything is still long from what I can tell. And again, if we look at the weekly chart, this is all all-time highs, yeah? So not very keen on shorting it. So we'll see, let's just stay patient. Like I said, breathe, wake up, allow some data to trickle into the markets, get that MGI going, and then we might have something. We might have something later. But yeah, I don't think it's going to be the biggest opportunity. It's a bad sign when we get to like a C and D period in TPO's market profile and we still don't have an extension. And furthermore, the move that came right at the open was massive. Contrary to popular belief, that is usually not a sign to plow in unless you're going for a momentum trade much lower down, maybe from like a 3-minute opening range, but that is not my strategy because I don't find it reliable enough in my products. So I don't really use the 1-minute, 3-minute, 15-minute opening range break. That is not one of the setups that I use. I know Hogue does, but he trades ES mainly. And over there, that is the correct strategy for certain times. But whenever I tried that in gold and in anything else apart from equities, and ES specifically, I just got smacked in the face. So I went and tested to see what the probabilities and stats of that particular strategy are on my products, and the accuracy of them, even when the setup occurs, was like barely 30%. To me, that's not good enough. I want something that occurs nearly every day at a rate of the success, like to have the success rate of at least over 50%, then we can kind of optimize to make it work. But anything below that, I'm just like, nope, no thanks. Okay, let's see some more questions. Are you bearish on RB and CL? I'm nothing at the moment. I'm just observing. So as a day trader, I don't come to the desk with any particular bias. I just observe, and then I aggregate all of the data that I have from my levels, from the options activity, and then I see how the market participants behave around those levels. Right now on crude oil, let me just bring that up. On crude oil, I don't really have much around these areas in particular. So I would either want to see it higher or lower. This is just like no man's land for me. Let's spin through the higher time frames just to get a good idea of where we are. So hitting that supply, we had a contract change. So this is not a real gap, but a contract change. But nevertheless, we are outside of that supply right now. But if we look on the daily chart, we've already had 4 days of down movement. Is it a good idea to speculate that we're going to have more down movement? Well, let's go back and see what happened last time we had 4 down days. Here's 1, 2, 3, 4. And then turns around, goes up, right? Let's have a look at some of the other days. Here we go. 1, down move, doji, doji. Let's say doji, down, and then up, up. 3. So on average, just scanning, you can use Edgeful for this as well, but just scanning of what happens after 4 days down movement, they turn it around, right? So I don't think today would be the right time to go bearish. Of course, anything can happen. Anything can happen. They can try to come up a little bit, then smack it back down and go all the way down. But statistic tells us that after 4 down days, things get a little bit sketchy for further downside. So yeah, just be very, very careful there. Right now would probably be more bullish for this time of the day. That might change for the next session. So, when I have new value areas that are quite far away and at different locations for NYMEX, that's going to give me different information. And this is why I stick away from trading for the first hour of NYMEX. Even if I had a London trade, I will very rarely carry it over, unless it's like platinum or something that doesn't really get that affected with V-shaped reversals. But crude oil and RBOB, they love the V-shaped reversals, right? After that trade I did yesterday, we had a crazy ADR low reversal that lasted all day, right? So that was, let's go down to a 30-minute chart. So here we go, that was my trade, right? And then we hit ADR low just sub 211, and it sort of went to a bit of a consolidation and went, where are we going? And then they turned it around and went all the way back up and then some. So, V-shaped reversals, that's the name of the game in commodities, and even gold does this a lot. But when I was on, one side of the trade and I already got my double, my 2R, I'm happy. I'm like, yeah, lock it up, chill for the rest of the day, and, go and have a look at some trades maybe for the main broadcast, have a few jokes with JD, and, enjoy the day, right? That's what we're here for. Okay, more questions. Let's see. Can you talk about the DAX fade? I already talked about that, Dave. TopstepTV, what is the pink and blue indicator and how do you use it? You're talking about this DAX thing. So that is my market profile. So that's Blatek MP, which stands for market profile, not Michael Patak, in case you were wondering. The red box or pink box, however you want to call it, that indicates the initial balance. It just makes it easier to visualize rather than having it all the way on the side, even though on the side you have the same type of information. So here it is, compressed. More traditional way of displaying it would be with the TPO letters. But I, back in the day, was always annoyed that I had those on the other chart. So you had it in a different window. You could never see what's going on. So I wanted to overlay it. And my company, Blatek, was actually the first ones to do that, to overlay it over the candle. Since then, many other firms have copied us, which obviously I'm not that happy about, but hey ho, be an innovator, right? And now nearly everybody has got some sort of an overlay version, but usually they have an overlay version that might look, which one is it? Hold on. That might look something like this, right? So you would have the letters, and you would have them all smushed, and then kind of, that's your profile. But I didn't like that. So I wanted to make it just graphically represent what's going on. And then the blue lines are your extensions. It also shows you the developing value, which is in orange, and then the finished and done value, you have them for different sessions here, but if I just focus on London, it's this pinky, purpley line. So it's quite far away on DAX. Now, if I switch on some of the other value areas, New York value high is actually at 21,241. That could be an area of interest because we also have the average daily range, the average session range in and around there. So what I would do then, I would go and see whether we have options related levels there. But yeah, it's not really an indicator for like buy and sell. It's more like just a little lens into the development of the market, how the auction is doing, whether they are, whether they're really pushing it, whether we're extending that first hour trading range, whether we're holding above it or below it, do we extend to both sides? Like all of that brings very interesting developments and changes my targets on certain setups, depending on when it happens and how. We're going to have Jim Dalton next week here. He is the godfather of profile. And obviously he sticks just to profile. That is his main thing. He doesn't talk about anything else. He popularized it massively among Chicago traders. And the people that I learned from even worked alongside him, right? So now we're going to have Jim Dalton on TopstepTV, and a great time to ask him a whole bunch of questions. So yeah, it's exciting. Now, what I did with Market Profile is to modify them and kind of evolve them based on the stats that I observed. And I am a heavy profile user, I'm going to say. I am. But is it the only thing that drives my decisions? No. I will also look at options activity. I will also look at projected algorithmic ranges and the time of day. You know, what do I expect at a particular time of day to happen statistically? And that's all part of the Market Stalkers method. I have like 4 sort of pillars that I use to make my trading decisions. And we have a couple of Market Stalkers in the house today. And yeah, let's have a look at some more posts. So Paul H says, hit the like. Thank you, Paul. Thanks for reminding me. Yes, hit the like. If you like anything that I'm yapping on about here, please show us some love, man. Like, you know, hit that button, hit the like, caress it. Don't hit it. Love it. Tell your cat to hit it as well. And yeah, all of that good stuff. It really helps us to get this segment out to more people. He goes, I never move stops. He's long MGC from last night. Pretty good, but not sure where the target is all-time high. Stop is a daily low because I was in early, so cheap trade. Excellent. I never move stops. I take profit if I see a significant change in direction on a 30-minute time frame. Yeah, so let's see. So you're long from like a mile away, right? I mean, you should be safe. If something starts to change, you should have enough time, provided you don't trade through the open of COMEX. But if you were long at the start and you did a cheap trade, I mean, you're in a pretty good shape here, right? To be honest, if it was me, I would just take the profit and go and chill. I always go for 2R multiples as a default on all of my trades. We do have overhead supplies here, so if they start to turn it around, you know, if the single prints from the profile, this is how you would be probably looking at it from the Market Stalkers method side. So we have some single prints that were left behind here. You can see them here. You can also see them over here. Let me just switch off the standard deviation bands so that you can see it a little bit better. So here are the single prints, right? Now that would be my reference for closing the trade. For me, that would be a market shift. The ICT traders call that, what do they call it? The fair value gaps, but it's the same thing. It's basically a big move that went outside of a certain area and left a big sort of gap, hole, cave on the way. If they start to take that out, that will mean that whoever bought on the way up is no longer there. So these guys that have appeared now, they will be taking control. That would represent a market shift. So in that case, I will be bailing. Another thing that can happen is that they try to close out single prints, but they bounce it anyway. This is where something like edge full FVGs on a 30-minute chart could come in handy as a stat, because it's effectively the same thing. Do we close out the single prints or not? And how often does that happen? Now, for some of the products, that would be like 50-50, so it really doesn't help you. And in that case, you just have to watch and see what happens. I usually like to use a 2 or a 5-minute chart for that purpose. And then I just look at how deep they've gone through it. If I'm long and I see it dipping more than halfway into it, I'm out. Like it's done, because it means that there's market shift in progress. And even if they bounce it, well, I don't want it because I already took all of that, right? So that's one way to figure out whether you should stay in. But yeah, Paul, you've got a banging trade on there. So yeah, well done. That's brilliant trade. Beautiful. Absolutely beautiful. All right, let's focus on Topstep here. Let's go. Justin Preeny says, "Hi Deeyana, when I cross the line, the finish line, and pass my combine target, do I close my trade or can I let it run?" There is no benefit to you going over the target of the combine, right? Nobody's gonna clap and go, "Wow, well done, you've gone over the target." If it was an XFA, that's a different thing, because there are no targets in there, right? You just trade every day and you keep going and keep going. But the combine, there's a target. The objective there is to get funded, so I would just close it and go, yay, I've got an XFA, right? So that would be me. Maybe if I overshoot it by, like, I don't know, a few ticks or, $100 or so, that's fine. But I don't know how long you've been in the combine. If it's just like 1 or 2 days or 2 days, just be careful of the consistency rule, right? So if you go too far over that target, what's going to happen is that you're going to have to trade more. Let's say you overshoot the 50K by $1,000. You have to trade more because that target, overall balance in the account has to fall under the 50% per day. Got frogs in my throat. All right, hopefully frogs have been drowned out. So yeah, I still have like a little bit of a leftover cough from that really annoying cold that I had towards the end of the year. Testnik says, can you explain quickly what are supply and demand zones and how do you find them? Again, that is a concept that, like, you can kind of explain it, but there are many little bits and pieces that need to be explained as well in order for you to efficiently start using them. But in the grand scheme of things, you're looking for swing extremes, like obvious points of originating highs and lows, and then effectively looking for return into those zones and the same reaction on the first test. If the zone gets tested multiple times, that makes it weaker. And despite what some other people say, the more times a supply or a demand level has been tested, the more likelihood that they're going to break through it. So that is the gist. But there are many little bits and pieces that are a part of the supply and demand trading. And I was taught one way online. Now we have some other way. Back in the day, you had Sam Seiden, who was like using a weekly chart and then going down to a 2-minute chart. That never made sense to me. That's not how I was taught. And to be honest, I used my own observations to come up with my own sort of version of what works for the supply and demand trading. And definitely I noticed that if the demand is not fresh, it tends to be less reliable. But I've never traded through limit orders. Like maybe in the first couple of months I traded through limit orders. I always look for reactions on a lower time frame at a particular time of day in order to zoom in and to minimize any drawdown if I'm trying to run a swing trade. But the gist of it is you're looking for a high, you're looking for a low, and then you're marking off. For example, on this chart, let's start again to make that pretty clear. Here's the high. And here's your resulting supply. Where do we draw the proximal edge of the supply? Where the market shift happened. I see some people online who are just kind of drawing it like this. And I'm like, well, what's that? You didn't take in the high. Like, hello? Like, we have the all-time high. That's obviously a part of a supply, right? Or some people draw it the other way. They draw it like this. And again, what is that? You have the high, but you didn't take in market shift, which is lower. So where was the equilibrium? Where did we start? And where do we actually break to the opposite side? That's the proximal point of the demand area. That's how my indicator is coded. You know, it's not up here and it's certainly not down here, right? It's like this is too late. This is just right. Where was the equilibrium? There. We stopped, started rolling over. That's your supply. And then similarly, where's our low? Well, here's the low. 25, whatever this is, 25.68. But where was the actual market shift? Well, not until here. So really, your market shift happened like that. I mean, you can zoom in. This is a weekly chart, so it's really massive. And then we can start zooming in to see exactly where the daily areas are. And maybe you might be able to find a better choice. And here it is. So if I look at the supply zoomed in on the daily, here is the market shift. Same area. We touched it, touched the proximal price of the demand, and off it went. It was a fresh area, so that was a swing trade on gold. Now, we can't do swing trades in Topstep, which is fine. I actually prefer not to run. So every time I have a swing trade on, I never sleep. But this is how you use it. So you look for originating highs and lows, how many times it's been touched, and whether we have a reaction from it. So if we have a reaction, that's a go for the opposite side of the party to step in. If there is no reaction, you can find many supplies that have failed on the way. So for example, let's get an obvious one. Okay, so here's a supply that is not exactly originating, but it illustrates what happens when the supply starts breaking down. So this was a supply, right? It is still a daily chart, not the biggest move away from it, and a very messy move to it. But once we go back to that area, we start trying to break into it, right? So it tries once, tries second time, tries third time. This is a daily chart. This is very painful to stay in a swing trade if that's what you're looking for, because you have 3 days of pain before they finally push up. And look, the edge, the proximal edge of the supply breaks down. That's your first sign that the supply is probably not going to do what it's meant to do. Goes very deep into it, consolidates, and then goes through it. That's the same thing that you want to look out for intraday. But intraday is a lot messier. So this wouldn't even be, if this wasn't the daily chart and we were on a 5-minute, I would just ignore this. And I would instead be looking at the true originating area all the way up here. So the lower the time frame, the more selective you have to be with the types of supply and demand zones that you might be using. But my primary way of looking for trade locations intraday will be my algorithmic ranges, initial balance highs and lows, and the options levels as well. So those are the 3 things that I would rely on. I have a super cheap course on my website about the basics of supply and demand that might be helpful. So, do check that out if you're interested in more so that we can move on with the questions. That is why the courses exist, so that we don't have to repeat one and the same thing. And there are probably about 6 or 7 questions that keep cropping up. What's initial balance? What is a failed auction? Me and Bruno actually went through it yesterday. It's quite funny that, maybe we should start every stream with failed auction, initial balance times. Let's have a look at some questions. Do you use Edgeful actively? I know you have your own tech company to gather stats, but it sounds like it would be valuable for us mere mortals to have statistics to lean on. Edgeful, I don't have all the stats. If I need to do another piece of statistics, like, how much does something move over, like, for example, some of the stats that I do are on my own performance. Having a look at my MAE and MFE, tell me how often was a particular target reached. So how often did my MFE play out? Like, what was that number and how often did that get hit? And then I can modify stuff from there. But when it comes to the actual price behavior, Edgeful is beautiful, right? They have a whole bunch of stats that you can use. Now, obviously, you can go down a rabbit hole, and many people will get lost in that. So be careful not to do that. But if you're just looking for stats like, does gold, like let's say, does gold go during London in both direction of the initial balance, or does it break to one side only? So what you would do, you would obviously look for GC. You would modify the session time to be short in London, because that's what I use. So I don't want COMEX. I just want to see what happens during London. And you can see that it's pretty much 50-50 for the overall stats. You can also go by weekday. Now for today, for Wednesday, the double break is actually more likely. So we have 50, like these are not super strong stats, right? So it's pretty much ballpark 50-50, with the double break during London happening 54% of the time. So what does that tell us if I'm looking at this market? That there is a very high chance that we actually rotate all the way back down and through the low of the initial balance, which is at 27.59.5, right? So that is how I would use them. And for sure, Edgewell is very useful. If you don't mind paying a little extra cash to get this sort of aggregated statistics performance about various things, they've got so many other things. They've got gap fill. And actually, if you notice and you go into indicators, it's something I asked Andre to do. If you go into TPO, time price opportunity, you will notice that this is actually the gap fill by value. Now they call it time price opportunity, but this is what it is. It's the gap fill by value. And initially they just had it for like the entire day. So I reached out to Andre again and I said, well, that's not going to help because we need sessions. I need to know what happens in London versus what happens in New York. And I would also like the ability to change the session. So all of that was added afterwards. Pretty soon, actually. I think they took like only a month to add it. And now we've got these sort of stats. So it's like if we open above value, how many times do we go back to value or not, right? So for London, if we open above value high, we do not touch value. So it stays above it 68% of the time. You can also go by weekday, right? So it's like that changes things a little bit. And that's more 50-50. Well, 42% did touched, 58% did not touch. What does that tell you? It's a very strong uptrend. And it generally tells you that gold trends hard. Like whichever side gold is trending, if you open with a gap away from value, it's very unlikely that you're going to get the test of value. So, use that in your trading. You also have by size, and this is something interesting. The smaller the gap, the more likelihood of the value area being touched. So if we are opening within 4%, basically anything above 0.4% distance, so 0.4% distance from value, whether up or down, it massively increases the probabilities of just the market going in the same direction and just screaming to that same side, whether it's short or long. But if we have a smaller gap, look at what happens. If we open below value and we are sub 0.4% distance from value, you will see that 73% of the time value low from the downside, so it came up into a mean reversion to touch it. That tells you a story of a strong uptrend, okay? And similarly, if you have the value area that is nearby, somewhere within like 10 ticks, 20 ticks or so, most of the time it got touched when we were above value. So it dipped a little bit, touched value high, went away from it. Usually what I see. If it opened below value, it still touched it. But we have 40% where it did not touch. So it offers opportunities maybe to both sides on some of those days. But the bigger the gap, the more probability that you're not going to get any kind of a mean reversion on gold these days, certainly in the last 6 months. If you stick on 0.7 to 1% date range, let's have a look at year to date. So 100% didn't touch. I don't know whether they do the 3 year maybe it's a bit too... Oh, no, they do. So if you do a 3-year sample, things are still looking pretty trendy, right? Pretty trendy. But again, the less the gap, the more probabilities of that mean reversion. So gold is not really that great for mean reversion trades based on the gap. And that's very useful, right? So if we have a gap, like let's say I'm very far away from value at COMEX, I'm not going to be looking for some mad mean reversions back to value, right? I'm going to be looking for maybe a pullback and then a further move up. So it definitely helps you to make better trading decisions, but obviously you're not supposed to use all of them. You're not supposed to go, oh, let's have a look at the volume at the open, try to make a decision about that. Let's have a look at, opening range breakout. Do you even use that setup? Like if you don't use the setup, why would you do it? Opening candle continuation. Can I use that? Like you still need levels. This is not going to be some holy grail that you're like, wow, now I have stats. You still need levels and you still need to know how to actually enter a trade. If you don't, that means nothing, right? It's all a big skill. Like we have to marry the stats that we have aggregated from Edgeful and other places, and then we also have to make sure we have good entry techniques, good risk management, and good levels to back up the idea of a direction. Edgeful gives you the direction; it doesn't necessarily give you a level, right? So that's just that's just half of your trade. For a good trade, you need to have a direction, you need to have a level, and you need to have a way to enter with good risk management. 3 things. If you only have one of those, what about the other 2? We're lonely. So yeah. Why do traders love to fade a trend even when it seems stupid to do so? Because sometimes fading a trend is the way to go. You know, in crude oil, there's very few days, unless it's like a Thursday, post inventories, where the trends just don't continue. You know, you try and run a trending move on like 70% of days in crude oil, you're going to be slaughtered with like V-shaped moves and whipsaws and stuff. So yeah, sometimes fading a trend is good, but in equities, I would argue that fading a trend is probably not that good on most days because of what they are. Equities have a very strong upward bias because of the stocks, right? They're usually typically biggest companies of a country, or they're in the index for some reason because they're the blue chip or whatever. Obviously, you have RTY, which I know Nick Fortick absolutely hates. And we have the Dow also. You know, Jack is not a huge fan of Dow. Because the types of the companies that are in those indices, but you can't deny that they are still very bullish. Now, are there times where we deem that the fade of the trend is definitely on the cards? For sure. But if you're just randomly waking up and shorting NQ every day, yeah, that's probably not the best idea, right? Don't be a contrarian. So there's a couple of rules. I'm a big contrarian. Like, don't get me wrong. I'm a mean reversion trader by nature. And in my life, I'm a contrarian. You know, somebody tells me, don't do that. And I'll be like, nah, I'm going to do it. Just to spite you. And I've been like that all of my life. You know, even when I was a kid, my mom was like, don't be a musician. That's a very difficult job. And I'm like, I'm going to be a musician then. Definitely. That is my mission in life. When she told me don't move to another country, I said, no, I'm moving to another country. So, you know, I've been a big contrarian in my private life. That is what I'm comfortable with. But having said that, in trading, if you clearly have a one-sided extension like we have on gold, if there are single prints that are left behind, you see, they tried to go lower, they bounced away from it, but this is still no higher highs. So there's another thing here where I would still say that longs are in play. I'm not going to go in here because I don't think there's enough profit margin there for me personally. But yeah, I do think that the longs today on gold are the way to go. Do we fade them? Maybe if we close out the single prints completely, maybe that would be a fade. But given the fact that we are up at all-time highs almost, so they're a little bit higher up, that's not a good way to go. So we have single-sided extension of the initial balance, single prints left behind. It's like, why would you go short? Just because? And if this was an equity index and it looked the same, I would definitely leave it alone. Leave it alone, right? You wait for a pullback. Unless the daily has turned and we have the low on the day from the previous day, and we have a clear open below value and an extension, clean one-sided extension to the downside, and maybe some single prints. All of that is a sign. Do not go against that, right? So anything that tells you a story of a super strong trend or just like a zombie rally, especially in equities, don't be a contrarian, Just because it looks cheap, oh, it's a cheap trade, it doesn't mean it's a good trade. In a strong uptrend, going short because something looks cheap is not a good enough reason for me, okay? Sometimes when they say, oh, it's a cheap trade, and clearly we are, about to scream higher, and there's like core resistances much higher up, I'm just like, yeah, let's not. And don't short the NASDAQ, please. But, those kind of signs need to be there for me in order to work on myself not being a contrarian at that point. And in a way, for me, going with the trend is the more uncomfortable thing to do. And I've had to work a lot to try and not short things when you're not supposed to short them. It was difficult, guys. It was very difficult. Just like anyone else, I really want to short the equities. But I've seen people lose their shirts doing that, over and over. And, for some people, they don't get it. They don't give up. They're just like, oh, it's going to go down sometimes. No, it doesn't. The market doesn't give a shit what you think. And it doesn't have to go down. When I started trading S&P, I think ES was like down at like was it 1,500 or something? This was like 10, 11 years ago now. 12 years ago. Christ, I'm old. But yeah, it was a long, long time ago when I was looking at ES, and even then it had an upward bias, right? It was slower, didn't move, 300-400 ticks a day, but it was still an index with an upside bias, definitely. So yeah, it's a very good question, trading like a bot, but yeah, sometimes it's the right call, but most times it won't be, so yeah. Zen Trades says, what are you using for options data? Right now I'm using Mentor Q. They offer alternative markets, so that suits me because I trade alternative markets. Most of the other services that offer options data would be like SPX or SPY or QQQs, and then maybe, ES or something. But Mentor Q literally pulls data from most alternative markets, and then if there's no like for example, gasoline futures don't have that much options activity, but they're heavily correlated with crude oil. So what Mentor Q allows you to do is to convert those levels into something else that is correlated. Obviously you can't do it willy-nilly, just like convert, I don't know, ES into crude oil. That means nothing, right? Like technically you can do it, the numbers will convert, but the levels won't mean anything. But if you convert crude oil levels into RBOB, then you get something, right? Now, intraday RBOB and crude oil are probably about 70% correlated. They're not like a factor of 1 by no means, but they definitely have a big correlation. So I will for sure look at crude oil levels in order to decide what to do with RBOB. But yeah, Mentor Q is where I get my options levels. Sushim says, ADR and average weekly range, how many days and how many weeks do you look at? I'm going to say average weekly range I would probably only look at if we already have a range established on the week. So, crude oil, for example, was in a range for many months. I think it spent like 4 months in a range. Now, that's the time to look at average weekly range. But generally, if it goes up into a trend or down into a trend, the weekly range is not going to do much because we expect that to be increased. since it's going to shoot up in a single direction. ADR, I like to use, these days I like to use 40 days. I know some people say 14 and 10, but actually given the fact that we have some outlier days where crude oil suddenly goes 200 ticks a day and then quiets down for 70 ticks per session, I want to smooth out that curve. I do use average session range a lot more, and for that I like to keep it at 10 days to make sure I'm working with the last 2 weeks worth of ranges and expectations. But for anything else, 10 is what you're looking for. So ADR, AW, like weekly ranges, I'm not even sure you can get, unless you're on a continuous chart. You're not going to be able to get more than a month's worth because these are all front month contracts. Crude oil and gold roll nearly every single month. Certainly crude oil does. Gold, I think, sometimes rolls ahead. Depends on the demand of gold and the users and producers of it. So yeah, for the weekly chart, I would use 4 weeks probably, so just 4. For the ADR, I would use anywhere from probably about 14 up to 40, depends on what's going on. And average session range, which uses only regular trading hours, I would keep that at 10. So hopefully that helps. Dee, I see POC from Globex session and anchored VWAP right at the bottom of that gap you talked about. Yeah, both of those are good targets, right? So any kind of anchored VWAP and POC, I rarely use them as starting points unless there's something else around there. So I have to have a very good reason why I would go into POC trade, you know, because generally POC just gets smashed through. It's a mean reversion target, right? But it's definitely not. I don't like getting involved at POC. Let's put it that way, because what is POC? Point of control is not a control. It's just the widest point of the profile, and as such, it can act as a magnet. Sometimes, like I said, if you've got an obvious originating point around there, you might be able to find a trade. But I definitely need like 2 or 3 confluences to tell me, okay, well, we're definitely moving away from POC now. However, statistically, just looking at the wide variety of markets, actually, POC is just not a good area to get involved. It either overshoots it, or it takes forever to actually get going from POC. I think anchored VWAPs are a little bit better because they are generally anchored from the lows and highs. And they tend to line up with like initial balances sometimes. That's something that I've noticed. So when that happens, obviously it's a very good area to start your trade. But if you don't have a confluence and you're just going, anchored VWAP, it can be used as a target. Just be careful how you use it as an entry. But yeah, great eyes, Paul, as usual. Ed Rice says, or Edrique? I don't know. I'm butchering that, am I? Yeah. Deeyana, how do you identify initial balance highs and lows? Can you please show? Very simple. So you take the first hour of trading, whatever session you are trading, let's use this, and then you just find the high of that range and the low of that range. Now we are in London at the moment, so obviously that will be like on gold. Actually, let's do that on TopstepX for a second to show you the process. Obviously, I have an indicator that does it, that automates the process. It's not like, oh, here's your levels. It just makes things quicker. You know, when you have something that shows you the initial balance, high and low. So the initial balance for today are these 2 candles, 30-minute, 2 30-minute candles. And then you find the low and the high of that range. And that is your initial balance high and initial balance low. And over here, that's going to be 2767.8 for the initial balance high. And then we're going to have 2759 5 for the initial balance low. Those two levels become your orientation for whether the auction is successful, whether it's failing, how strong is it, and whether we are rotating through it or not. You can also have a neutral day fade if we now rotate all the way through as per Edgeful stats. If we do rotate all the way through and we find ourselves in that, whatever it was, 54% day, where we have extensions of the initial balance to both sides, we can find a long as a neutral day fade. But in that case, I'm not going to look for the rotation all the way back through initial balance. Instead, I will stop in the middle. This is where POC of the fixed range profile can come in. That can be a very good target. Session VWAP can be a good target. Overnight VWAP, yeah, that can be a target as well. But for those sorts of purposes, neutral day fades, I use the session VWAP as my target, which usually falls somewhere in the middle of the range. So yeah, very, very simple, right? You don't need an indicator to show you where IB high and IB low are. Just identify the first hour of the regular trading hours, and or the current session that you're in. Right now we're in London. If you were trading Asia, that would be Tokyo. So from midnight GMT till 1 a.m. Find the high and the low. That's your reference point. Very, very simple. So hopefully that helps. Trade Together says, can you take a look at the treasury bonds? Oh, God. I don't think I've got treasury bonds. I don't pay for them, because I have a huge dislike for fixed income. I don't think I'm going to find treasury bonds. No. So unfortunately, I don't pay for it, and this is a live account. So anything that you ask me to have a look at, if it's on a different data feed and I don't pay for it, I can't have a look at it. So I won't be able to do that. I am not a fixed income person. So fixed income only moves when monetary policies are being talked about. Outside of that, like obviously right now we have the big regime change. You know, we have a new president in the States. And that is going to cause movement because everything is up in the air. You know, what he's going to do with new policies, how he's going to approach tariffs and stuff, and, you know, what's going to happen to inflation. That will move bonds. However, I heavily dislike trading fixed income through outright positions like these. I would rather run options on them because there are months where they don't move at all. And that's one of my mental triggers. When I'm in a trade and nothing's happening, right? I start doing stupid things. It's one thing that I'm still battling as a trader after 18 years, where if everything slows down, I would try to go one side, go the other side, go third side, and then realize that I've cut myself up for no reason whatsoever. So I stay away from fixed income bonds. They're not the product for me. You know how every person on Topstep has their own product that they dislike with passion? That would be bonds for me. So you have Robert Cooney that hates gold. You know, Dakota says that he hates NQ and Nikkei intermittently. But I would say that he's a very good trader. So obviously his own perception is not going to be what other people's perception are. And he might feel that it's a bit of a fight on some days, but overall he's profitable, right? So, however, in his head, he thinks that, you know, there is a fight sometimes between him and those two products. Then you have Nick for a Tick, hates RTY. You know, I'm somebody who hates bonds. So there it is. It's out there on the internet now. Now you know. Dee hates fixed income. Are single prints same as fair value gaps? They are very similar. So fair value gaps, from what I can see, you guys look at them on like 1 minute and 5 minutes. Whereas single prints on the profile can really only happen from 15 and 30 minute TPOs. So we're not looking at them on the super low time frames. We're always looking at them on larger time frames intraday. And yet I've seen some people going, there's a 1 minute FVG and then like the area of an order block. And I'm like, okay, cool. and then that fails, and they're like, oh, that didn't work. Yeah, because it's on a 1 minute chart. Like, zoom out. But if you look at 1 hour FVGs, because I'm nosy, so I like to look at things. Yeah, they have strong stats around them, whether they're mitigated or unmitigated. They're very similar to single prints. However, you have to have a relevant enough time frame in order to have them work out. But yeah, very similar concept. It is a big move that leaves an area and has a cave from wherever it came from. And then whether that cave stays or fills, that will be your decision-making point. And there are stats to go along with whether something fills the single prints or FVGs or it doesn't. Very important, right? Bogdan says, hi Dee, how do you set up heat map, Bookmap? Well, I actually did prepare today. I did my homework, so we have Bookmap here. I just use a generally default settings, but I do change a couple of things. So first thing is that I do add the number of trades on a bubble. Second thing is that I do change the volume dots to show me total volume and rather than volume delta by minus L, right? So I want to see whether this is happening on the bid or the ask if we're in the UK. I always feel like every time I come back from Serbia, my accent goes a bit weird. I don't know whether you guys have the same thing. But yeah, so this is my settings. So I don't really change all that much. The only other indicator that I add is obviously cumulative volume delta. It might be a bit different from what Hogue tells you, but it's still reasonably similar. Like if there is some big delta divergence, like right now we have a pretty big delta in crude oil to the upside, so big positive delta. And crude oil is not exactly moving, but for now that is congruent with direction. We just hit average session range high on crude oil. We just hit it. That's this blue dash line. So now the question is whether we go through that or whether that'll be the stopping point until NYMEX opens. Once NYMEX opens, that line is no longer relevant. You can have the London high if it stays there for maybe some fades later on. But, as soon as the new market starts trading, everything changes. And suddenly we are in the territory of new levels, new players with very, very different intentions. But yeah, so this is my setup. I do have the absorption indicator as well. Let me see whether there was absorption anywhere. Okay, here we go. So there was a seller absorption here, and as a result, we then saw a little up move on RBOB. That doesn't have to be like that. If you have a very strong trend up or down, exhaustion of the opposite side means nothing. I've seen it where it says absorption of sellers, and it still smashes through it like 2 minutes later. So yeah, you have to use this with levels and with kind of contextual nature of whatever is going on in order to make sense of it. Sometimes you will see a whole bunch of orders, like for example on gold, we have a big order block here around 27.74.5. If we get aggressive buyers, I would expect these bubbles to keep getting bigger and greener, right? And then I would like to see these guys disappear, pull their orders. Right now that's not happening, so we may have found a temporary slowdown here, right at 74. But we still have some space, statistical space. So if these guys go away, then yeah, there's a very good chance that we reach at the very least 27.76.7. So that is the next stopping point. But for some reason, here they are. They're like, we're going to sit here and wait for our limit orders to get filled. You can also see the strength of them. Like when they start to fade, they will go more blue. And sometimes, if the participants are strong enough and they're assaulting the level pretty strongly, you can expect these guys to get smashed through. So these guys do a liquidity grab and just keep going. But if you don't see that, if they're still there and still building, that can be a sign that we found the top for now. And sure enough, here are some sellers. And on the downside, these guys that were here, the yellow guys, they're now not here anymore. They disappeared. So if anything, this might be the time to fade gold. I'm not going to do it because we're at all-time highs, so I'm not interested in that. I'm interested in long golds after a big pullback, if we get that today. If we don't get that today, no trades on gold. And right now, for all intents and purposes, I don't actually see a good setup at the moment anywhere. So yeah, I don't know whether I'm going to do a trade during London today. It's not an everyday thing. If it was a DAX thing, yeah, maybe we can trade nearly every single day, but even that is not going to be exactly, multiple trades per day, smashing it left, right, 5 trades. Yay. It's not like that. So, yeah. But yeah, that's how I look at Bookmap. Those are my settings. Nothing too crazy. Pretty much default with a couple of tweaks. And that's it. Fizzlid says, Coach D, can you explain what is a mean reversal? So the reversion to a mean usually happens when you have a statistical measure that gets overstretched. And then the guys that are still up there, they're going, they're either going to take profits because they've gone high enough or low enough. And they're going, well, we don't actually see any more cash being made here. So they start taking profits. And that typically leads to an elastic band effect where the mean reversion is fast and furious and it just starts rolling the market the other way. Sometimes it takes a while to get going. But once it becomes obvious, it is a beautiful opportunity. Those are my favorite setups. I wish we could have them every single day, but we don't. One thing to note with mean reversions is that you do have to have some sort of a stretched out measure. Let's say you had VWAP and we went to 3 standard deviations away from VWAP. And now they're losing steam. And slowly you start to see the market rolling back into the bands. That is the time to attempt a mean reversion down to VWAP. Similarly, you can have a day where we open with a big gap, but obviously we have to use edgeful stats to make sure the gap isn't horrendously large, because the bigger the gap, the less likelihood that it's going to fill. But that can also lead to, you know how Hogue says, gap rules apply. That's what he means. We open outside of value, and we're looking at a mean reversion to value as the first point of reference. If that doesn't happen early enough, there is no gap fill, and we're looking at further longs. Typically, I like the gap fill to value to happen within the first 2 hours of regular trading hours. If it doesn't happen, I'm looking for longs, to a continuation. So yeah, that's what I mean by mean reversion. There are several ways of doing it. You can even have a form of a mean reversion intraday where we get up to the algorithmic ranges, so the projected range and projected volatility on the day, and then there's some algorithms that big institutions use where they say, okay, well, that was the projected range, now let's go back. That's a form of a mean reversion, but I wouldn't say that's a true mean reversion, because you're effectively starting from the mean or projected range. So to me, that's like almost the other way. We went up to the mean, and then we're going away from the mean, right? That's in my head. You know, these are things that I think about as a nerd. But yeah, so to me, that's why those sorts of ADR and ASR reversals are much slower. They're more orderly. You know, you're not going to get a touch of the ASR or ADR and then a big reversal that's super violent. But when you're looking at a mean reversion to value, they start to roll. They smash through the initial balance low, and then they go whoosh. And in a blink of an eye, you're back at the mean. That's a true mean reversion, right? Anything slower is probably not a mean reversion. So that's how I like to look at the price velocity when I look at a setup. And similarly, if I'm looking at a failed auction, which is a form of a mean reversion as well, reversion trade, we try to go above or below the initial balance, we fail, and then we need to see a pretty quick rotation through the initial balance. If the rotation is not quick, it is not a true failed auction. it's then probably the hallmark of maybe a range-bound day that looks the same, but it's going to take like 3 hours longer to actually rotate to the other side. So yeah, some, little differences that I've learned as somebody who's been staring at this stuff day in and day out for 18 years. Price velocity matters. Okay, do you think we will ever close the election gap completely on NQ? I mean, it's possible. When that happens, I don't know. Maybe we need another Black Swan event. I hope not. But yeah, it's possible that at some point the bubble will burst and we may see the election gap close. Is it going to happen this month? Probably not. Throughout the course of the year, it depends what Trump does, right? We'll see. No one knows. Paul H., how do you rate Bookmap as a tool you use? Do you use it every day? Yeah, so I do. I have Bookmap open most days. Sometimes if I'm on the streams, I can't run NinjaTrader, which is where I have one of my accounts. I can't run all of it because it starts to mess with my CPU. So I want to make sure that the stream is relatively smooth. So sometimes I won't have Bookmap on when I'm talking to you guys. But yeah, I do use it every day. Do I use it every day in every situation? No, because sometimes the market is too slow. There's not many orders. Like, for example, if we were, let's have a look at platinum. Platinum is pretty thin, right? So if we let it populate, you will see that there's not much there, right? So you have some orders that were there before, but like what can you possibly derive from here? Nothing. Shorts are happening. Where are the other orders? I don't know. They pulled them, right? We have orders from back when we were at these levels, right? But right now, at these levels, currently, we've got nothing. We've got 10 things deep. Is this really useful for me if I'm going to run a swing trade on platinum? No. So, there are some products where Bookmap is just not very useful. But if you have a dynamic product like NQ, for example, NQ is very, very fast and there's a lot of stuff happening. So you can actually notice the difference between the market participants going long and then suddenly market sentiment changes and they start plowing in shorts. However, that usually doesn't last all that long. And you can see it in Bookmap if you know where to look, obviously. But it takes a while to really live and breathe with it before you're like, okay, now I know what I'm looking at. So I always say, record your screen alongside a regular chart and then see how that all plays out. So what is this? This is GC. So what did we have? This is the consolidation. And how did we move away from that? Well, we reversed, right? And suddenly we have a change in sentiment in the bubble. This is like the bubble that is mostly comprised on the ask. So somebody is selling on the ask. That's pretty aggressive. Is it going to hold? Well, nobody knows that. But you can see that now some buyers have stepped in again. So this sell-off was just a momentary sell-off. How many people are on the way up? Not that many, and they're not that strong. Really, they're all the way up at 73, 74, where we saw the initial reversal. So that's still a very potential target here. So if you're going to run a scalp of 30 ticks on gold, that's something that you can see on Bookmap very well. It's just I don't like scalping. So I will use Bookmap for an entry and potentially for an exit if I'm somewhere near my target. In between that, I don't really stare at Bookmap. So I will frequently enter a trade and then I'm going to go and make coffee. Yesterday I went to a private field with 4 of my dogs and we were away for like 3 hours and I was running the DAX trade whilst that was happening. So, it's pretty stress-free. But whilst I'm looking for trades, whilst I'm trying to decide if I should go in or not, I'm going to stare at Bookmap absolutely for certain products. Edward Kendall says, how do you differentiate between wanting the orders to disappear and the liquidity being a magnet that draws price? Are liquidity magnets more applicable in ranging markets? Absolutely not, actually. I found that in a ranging day, there's a whole bunch of levels on the way up and down. So actually on a range-bound day, I will look at the normal price chart to identify the high and the low of that range. And then I will just wait for those to come in before I start looking for the other side to step in. But yeah, on a range-bound day, you will notice, for example, they'll have some orders around 69. Then they're going to have more orders around 66, 68. Then they might have some orders around VWAP, and it means nothing. So I find that not staring at Bookmap on a range-bound day in the middle of the range is very, very helpful. But once they get to the edges of ranges, I absolutely focus in. And then I'm like, okay, well, I'm going to ignore all of these guys. I only want to know, like, let's say we rotate in gold today all the way down to I below. I want to know what happens once we go through I below. So not even what happens there. No, I want them to smash through the low first, which you will see on Bookmap, usually some weaker orders there. And then they just take all of that. So that's a draw of liquidity. But, you know, for those sorts of setups, I would be looking for a failed auction. Right now, we're far away from the initial balance. And this would be, if anything, a hybrid between an auction fade and a failed auction. So the auction succeeded. We got up to 74, 75, whatever it was. Now we're sort of, you know, trying to decide where to go. But the best failed auctions are when we leave the initial balance a little bit, you know, maybe about half the size of the initial balance, and then we fail. When we succeed and hold above it for 2 hours, that's a successful auction. You know, you can have an auction fade down to IB high, but that doesn't mean it's going to rotate all the way down. This is still pretty strong, right? But just in case that, you know, I was looking at a rotation, I would want, let's see what's happening. I would actually want these guys to disappear. And why? Because I want to see the auction fade play out down to 2768 ballpark, right? So I want to see all of these orders disappear, and I want them smashed down to 68 as the first point of reference. Now, I'm pretty objective when I'm looking at the market. I don't want anything from the market. Sure, when I'm in a trade, I want, you know, to see something in particular, but I'm not the one going, I really want this to rotate the other side. I just look at what's in front of me at the moment. And if that starts happening, I become reactive to that event. I'm not trying to predict what's going to happen. If that makes sense, I'm just trying to be as objective as possible and just going, what are my setups? So today I have a couple of setups. One is the auction fade, which is very risky at in this context on gold. The second one would be maybe a bounce from IB high. So another long to go back up. And the third one would be the neutral day fade after we smash through the initial balance low, but before COMEX opens. So there's a time also connected to the expectation of the hypothesis that I want to run. And obviously I look for bigger trades. I don't look for 10, 20 ticks, 5 ticks, you know. You know, it's not the quick draw McGraw show over here. I look for 70 ticks. You know, yesterday, RBOB, it was like 150 ticks profits. You know, that's the sort of trades. They're the D-style trades that I like to do. So you're not going to see me clicking buttons too often. But when I am in a trade and I don't kill it early, I want to get like at least 70 ticks out of it. And ideally, you know, 150 if the market offers me that. If not, then that's it. So objectivity is a huge thing to develop, Edward. So I would work on that. So rather than going, oh, I want the orders to disappear, it's not a matter of wanting the orders to do anything. It's a matter of just objectively looking at what's happening. This is where the brain processing power comes in, being able to react to something that's happened really quickly. So, I have hypos for both. So, for example, I would have maybe a short if we weren't, at all-time highs. I would maybe have a short hypo, and that would mean looking for orders to disappear. If they do, great. If they don't, you bail early. You guys have seen me bail early, trades early so many times here. Why? It's because I see something that I don't like and something that I don't want to see. So in a way, it's more like, what do you not want to see, rather than how do you marry what you want the market to do. So stay objective, work on staying super objective and just not really marrying yourself to any side, but still having hypos and contextual nature of what should happen versus what is happening. Hopefully that makes sense. Vincent says, I see. So can we say what happens with NQ and the NY session yesterday? A failed mean reversion. Buyers try multiple times to break upwards. Sellers thin out and eventually the price rally up. Absolutely, yeah. So if you're watching me while I was on with JD and Tim and Dolby, so we were debating that short NQ. And I said, well, they're probably going to dip down to about 700. Just, a little bit into the initial balance, and then they're going to pull it back up because we do have a pretty relevant gamma exposure level around about that price as well. And that's exactly what happened. So JD was watching it actively, and then he goes, D, it happened exactly as you said it would. And that's because of that, right? You look at what Bookmap is doing and what they're doing. As soon as they tried to dip into the initial balance, everybody disappeared. And then the reversal happened, and then we were back up, and then it sort of wagged around for power hour. But yeah, it was definitely an interesting Back to the Future session. And to be honest, I was more in favor of longs there at that time of day because we established a nice range, tried to go down, it had an upward bias, and tried to go down. Nobody was interested, and it just came back. So yes, you can have a failed mean reversion too, and especially on short side in equities, failed mean reversions happen a lot. So it's like, yeah, we try. I sometimes call them the failed auctions. It's like, well, it clearly failed the auction, but it went nowhere. Sometimes it hits overnight VWAP and bounces up. What's that? Well, it kind of tried to rotate through the initial balance, but it didn't do it. So I call them either partial failed auctions or a failed auction, especially if we end up miles away from the initial balance again. So yeah, it just fascinates me, like, to no end. I just love this stuff, man. Like, I absolutely love it. But yeah, you're right, Fizzlid. Yes, that's exactly what happened. So they tried a failed auction. I don't think we ever got the close back inside initial balance. And I'm going to use I know we want to stay focused on Topstep, but we don't have the backtest mode, whereas I have it here. So from my memory, I don't think we ever close back inside IB. I think we tested it. Here we go. So this was around about the time that I was on with JD, Tim, and Dolby. Yeah, so this was the hour that we were on. So as you can see, it never actually closed. Like, this is the initial balance. It closed for power hour, but it didn't do it anyway. And it still held the low. So you had almost like a double bottom here. And that was just sub 700. So that 700 was definitely an orientation point. And I don't know what happened. I had to leave after that because we had people coming in. But yeah, if they were using the 700 as an orientation point, they probably had like a pretty nice banging long trade. So yeah, that was very interesting. But yeah, so it never actually closed inside the initial balance whilst we were on. It literally just dipped into it and then went back up. So that will be a failed attempt at the failed auction. Whereas for me, a failed auction would be if it dips, nicely into IB and then it pulls back outside. That's a little fake out. So yeah, anything can happen. This is why staying objective in your decision making is extremely, extremely important. All right, guys, I'm going to finish it up here. I don't think we're going to get any trades. Gold didn't quite dip low enough for me to get involved. Certainly not getting involved in the middle of the range. After this, the auction started to go up, so now we just have that lull until the overlap. It pretty much died, and getting involved in that is not the greatest of ideas. So yeah, I'm gonna finish it up here and just rattle off some of the links that we've got. Obviously, we have the Eurex. I know most of you in here have already voted for that, but please keep telling people to upvote. They are trying to work on it, but obviously it's not a super priority, and we definitely need to make sure that at some point this year we do get DAX. It would be an amazing feature for Topstep, and for anyone who's in the UK, Australia, Asia. Now, if you've made $5,000 in payouts and you are not in Europe, but you are in the US, you can request your payout club, 5K payout club badge and hat through this link that I've just posted in the chat. But for those of us who are in Europe, we don't have that option. However, we do have Discord. So we have over 100,000 people in Discord with dedicated coaches rooms. And once the VIP starts, I will be doing the same as well. So you will see me in there too, even though I don't really like to get involved in Discord. Every time I pop in there, it's just like, ooh, okay, too much. And then if you're looking to come and trade with us on TopstepTV, please fill out the casting call that I've just posted. And, you might need to make a video just to see how you are on camera. If you want to come have banter, do some trading, fill that out, and we will see you on Back to the Futures or lunchbox trading or one of those rotating segments going forward this year. Thank you so much for being with me. Amazing questions. I mean, I'm amazed how much all of you have grown, and the questions are getting more elaborate. They're getting very thoughtful. Before we're like, oh, what's initial balance, and now we're like, well, how do you differentiate between a true failed auction and a fake one? That's amazing. I'm very happy to see that. So let's continue that growth throughout 2025. I'm going to see you tomorrow. I'm going to see if Coach Ray can join us maybe tomorrow, because I know it's been like holidays and stuff, so we haven't been able to get him on. And it would be nice to get a guest on and to give him some time to catch us up what's going on with his mindset hunters, and to give us his take on the levels that he might be looking at. All right, that is it for today. I'm Marcus Stalker D, aka Deeyana Angelo. This has been the London session on TopstepTV. I will see you guys as usual tomorrow for the London session again. Take care.